That is right, folks. Here I am, Microsoft stock. Had to mention Microsoft because this was one of my big bets. I was very excited for it this week because, look, there's been a lot of negative press on Microsoft for no reason. And that negative press kind of relates to more of chip issues as well, which is stupid, but the gaming segment's going to suck because of chip shortage. Look, analysts are bums. They have no clue what they're talking about. The stock's up 42% on the year. Pretty high, right? Last year at 45%. Last 5 years up 400. Look at this. Solid up. There's no dip here at all. Even last year's dip, guess what? Microsoft said, F you. I'm only going down 25% when the market's going down over 40%. So Microsoft says, hold my beer. That's what they say. So let's just take a look at these earnings and see why it's up 2% after hours. Probably because of a massive beat, because I told you it'd be a massive beat. Non-GAAP EPS of $2.27 beats by 19 cents, and a GAAP EPS of $2.71 billion beats by 64 cents. Massive beat on a profitability standpoint. I like it a lot. I like that GAAP EPS line. See what it equates to in terms of net income, obviously. But this is a more fitting. Oh, baby. Revenue of $45.3 billion, up 21% year over year. Big growth. Beats by $1.3 billion. Now, this is a cream of the crop company. The cream of the crop. That's what Microsoft is here. I hope you understand that. Let's look at some of the business, by segment here. Productivity and business processes, 15.04 compared to 14.71. Beat. Intelligent cloud, big beat. 16.96 compared to 16.58. Big beat. More personal computing, that's right. Despite your chip concerns, big beat. 13.3 compared to a 12.6 consensus. It's getting to me. But look at that. Big beat. Digital technology is a deflationary force in an inflationary economy. Look, that's fair. I guess so. I mean, when you think about software, yes. I mean, it is. Cloud services definitely shouldn't rise with inflation. Shouldn't. But you never know. Let's take a look at the press release, see if we can find some good stuff. Net income line, can you believe this? $20.5 billion. Half of what they brought in revenue is net income. This is a company that can make it rain like few others. Great company. Cash printing. They're printing it like the Fed. Okay, it's ridiculous, but they're actually earning it. The Fed's just making fake cash out of nowhere. Microsoft's earning this cash. These are fantastic results. That includes $3.3 billion net income tax benefit. Okay, look, that's fair. It includes a tax benefit. But that doesn't matter. $20 billion. Fantastic results. So let's just take a look at some of the lines here. Some of the lines. So obviously you see good 22% growth year over year in terms of revenue. Beautiful stuff. Operating income up 27%. Net income up 48%. Massive. And EPS at 49. So really good to see on that aspect. I like it a lot. So revenue of the productivity business we saw up 22%. Productivity and business processes, like to see it. Office commercial products up 23. Really good. Office or Microsoft 365 consumer subscribers, always one worth mentioning, has increased to 54 million now, which is good. You love to see the growth here. LinkedIn revenue, which again is kind of still in its infancy of what they're able to do with it in terms of monetization and actually making money off of it, has increased 42%. Could increase by a lot more in the future. Marketing solutions grew 61%. Really nice to see that. Dynamic 365 revenue growth of 48%. Really good. But here's a big thing here. Cloud growth of 31%. Server products and cloud services increased 35%. But here's the massive number here. Azure and other cloud services, Azure up 50%. That is incredible numbers. Incredible. People were talking about slowing growth rates. Look, it only is slowing because they're putting up so many billions of dollars. They're growing by the same billions of dollars, actually more billions of dollars, but the percentage looks worse. Analysts are bums. That's all I can tell you. Revenue and more personal computing, great stuff. Up 12%. they're growing at all. Xbox content increased 2% off of an incredibly busy last year in overall video game industry here. Search and news advertising revenue up 40%. Surface revenue did decline 17%. The one negative thing I can see all there. I mean, that's all I can see. So that's the only negative thing I can see. Let's look at the press. This is the press release. Let's look at the balance sheet on this company. See how good it is. I mean, it's a beautiful balance sheet. I can just already tell you. Based off that net income line, you know the balance sheet's pretty stacked with cash. And it is. Total current assets here. It looks like they converted from short-term investments. They converted into cash equivalents. Not bad. 130 billion compared to 130 billion. Really no change there. Total current assets as a whole, though, really at 174 compared to 184. So you saw a decline here, mostly here in the accounts receivable. So it looks like they got some of that moolah. Total assets in general, though, did increase 335 to 333. So it's a slight $2 billion increase. Again, $2 billion is a lot of money, but for them, kind of chump change. Total current liabilities, that's a decline. Oh, baby, it is. $80.52 billion compared to $88.6. So they paid off some accounts payable. They paid off some accrued compensation. They paid it off. Total liabilities in general at 183 compared to 191. So look, they grew assets and still declined liabilities by quite a decent bit. This is a great balance sheet on this company with stockholder equity at $151 billion. Really 152 compared to 142 of just 9 months ago. So just 3. That's not right. That's not right. It's not 6, not 9. But 3 months ago, they grew $10 billion on the equity line here on this balance sheet. It's a beautiful balance sheet. It's a beautiful company. Let's look at the valuation here. This is a stock that will, after today, be trading around a $2.4 trillion market cap. Very expensive. Very expensive. 2.37 or so after this gain, I believe. Right under 2.4. Now, this is a company that in the year will be doing right around this year. Look, let's be clear with each other. Let's be clear. Should be doing right around 200. That's aggressive. 180 to 190 billion dollars this year. Trading at a market cap of 2.3 trillion is pretty expensive, but it's not when you think about it. Right? We're talking about 12 times the amount or really closer to 10. The brain doesn't work. Yeah, right around 12 times the amount. Okay, use the brain. For a company still growing at high, we're talking about 20+% growth in revenue while growing the net income line by a significant margin and a fantastic, unstoppable balance sheet while also paying a dividend out. Look, P ratio at 38.5 is actually pretty high for it. This quarter should help that, obviously. The P ratio go down. The valuation's high on Microsoft, but this is one of these stocks that honestly you can put money in it today regardless of the stock price, and 5 years from now you'll be up pretty big. This is a fantastic company. It's run properly. It's pretty well avoided bad press significantly. I mean the only issue was butt munch Bill Gates. He's the only bad press this company's got. Look, quit hanging out with Epstein. Have you thought about that? He didn't kill himself, by the way. That's what I got for you. I hope you have a great day.